started, guys. Join us. I just sneezed about 1,000,000 times before I came on. I don't know why. One of those things. Thought I won't start it and put you through me sneezing for whatever reason it is. Okay. We are all waiting for the Fed tomorrow. Who knows what they'll do? Well, 96% chance they're going to cut 25 basis points. It's all about the market response to me. The macro guys have got all this stuff, and it's great. And I like listening to the all the macro guys and the analysts and stuff. But it's all about the market response, ladies and gents. It's all about what the market does. Actually, today, we are talking about key levels and support and resistance, and I'll go through that in a moment when we get started. But really, this is really apt because it helps to kind of build this trade framework using levels, using response to things like Fed, CPI, etc. So we'll get started in a moment. Let's everybody jump in. And what I'm going to do today, something a little bit different, right? So got some slides for you. I'm going to go through those to kind of cement some of the ideas and frameworks that I think are important. Then, tech permitting, we're going to move over to the screens, trading view, and kind of run through, put into practice some of the stuff we talk about. And I think it's going to be good. I think it's going to be good. Before we get started, I sent an email out yesterday, and it was linking to a video. I went on a Aston Martin Aramco Pepperstone day. So track day, some clients went. They were kind of had a few days, and so it was one of these times where you get to drive an Aston Martin Vantage around the track, DBX, and it was pretty, you could push it as much as you wanted, as long as the confidence was there with the instructor. He was like, yeah, keep going, get it in track mode. So it was great. I love that type of stuff. Maybe some of you guys went on different days. It's open to, some clients, and they gave us this after we did a tour of the F1 factory. I don't know if you can see that, which is a little bit of the 2023 F1 car. So if you're into your F1, have a look at that video. And if you can't access it for whatever reason, I've got some other videos to upload. I'm going to dump a load of the videos. There's video footage team there. They were doing all sorts of stuff. I did a kind of quite humorous sketch, which I won't reveal what it was, but I'll put it up and I'll send it out in the daily email. So if you like that type of stuff, you can see me being a bit, having a bit of fun, then I'll send that to you. But anyway, that's by the by. That was an interesting day. One of the things that is a nice thing that Pepperstone can do for some people. So that was good. Right, let's get started. By the way, thanks to Pepperstone for partnering on this webinar and allowing me to talk about all the stuff that I think is going to help you move the needle. Today we're going to talk about key levels. This is what I call the support resistance advantage. And really the idea of this is not to get ahead of ourselves, and if we do, we'll skip through, is to declutter our charts and to really recognize the areas you want to do business, because trading is all about simplicity. It's all about being comfortable with executing the trade, comfortable with knowing when the trade is a loser, comfortable with riding the trade. It's just having that relaxed state. And actually, before we kind of get going, I forgot, I want to read you a little extract from Steve Ward. He's been on the podcast. He's been a couple of times, actually. He wrote this book, one of his first books. Can you see that one? High Performance Trading. Okay, extract here. Practical strategies. How do winners handle losses? Here are a few hints and tips that if you apply them will help you develop your resilience to deal with losses and setbacks and to bounce back more quickly. Number one, develop positive beliefs around losses. Accept that losses are a part of trading and that setbacks and challenges are a part of achieving any challenging goal. Embrace the challenge. Tiger Woods famously said, I smile at obstacles. Number two, final one, I wrote with the whole lot to you, but this is important. Keep perspective. Imagine the number of trades that you make in a year and put a single loss into the context of the number of trades. Imagine someone making 5 trades a day, 25 trades a week, 100 a month, over 1,000 a year. Each trade, a losing trade, as a percentage of those trades is just 0.001%. And that's an example of someone taking 5 trades a day. Right, fine, you may not be taking 5 trades a day, but you get the point. When put into perspective, a loss is an irrelevance, and we attach so much to it that it becomes a burden. It becomes something that's really, we struggle with mentally, and it's really, that's one of the aspects of being, a great trader, is being able to separate yourself from that and not worry too much about the individual loss. Okay, so today, let's push on. key levels, the support and resistance advantage. So this might sound simplistic, as I said in my email, and kind of said in some of the correspondence going out. This might be like, oh, endurance, support, resistance levels, I know how to do that. No, we're taking it one level higher than that. And really my objective today is to help you understand the levels that are important to you. Your chart, put it this way, here's how I think of it. Let me just put it straight, or give it to you straight. Our charts are sacred, right? They are the one thing we use to make these risk-based decisions. We are paid for making good decisions. That's what we do. And to do that, our decision support tool, our number one decision support tool, if you trade from the charts, fine, some people may not, but majority of people do that, is your chart. And so we should never, ever let anything come on that chart that is going to pollute that decision, or is going to make that decision harder than it needs to be. Anything on the chart should support your decision. That's your North Star. Simple, done. You put any other stuff on it, you got to make damn sure that that is going to help you make a better decision. Otherwise, it's pushing the other way and it's making trading harder than it needs to be. There are too many people. I'm not saying this is you. You're kind of in the middle somewhere. Some people have so much rubbish on the chart that they can't see the wood from the trees. Now, you and I both know, we look at that and we go, it's too much. But still, I think a lot of us fall into the trap of, I'll just put this on. I'll just draw this line. I'll just add this. That's a key level. That's valid. But we're not rewarded for doing technical analysis. We're rewarded for making good decisions. And fine, some of them will be a loss, just like Steve Ward said. That's the way it is. And some of them will make us money. And over time, we're hoping that works out in the wash. But we need to keep our decision-making process as pure as possible. And so really, hopefully at the end of this, you'll see how we kind of go through. I'll show you how I kind of go through the process myself of adding the levels, and how, brutal you can be in saying, well, yeah, it maybe is a level, but is it really a level for me? More on that in a moment. I kind of got ahead of myself, but that's why I wanted to think when we're going through and we're kind of talking about this is, you're paid to make, or you're rewarded, should I say, making good decisions. Your chart is the one thing you use, and so treat it with absolute respect. It's sacred. Nothing goes on there unless it really, really, really supports you and helps you make better decisions. And funny, why I say this is just chatting to a trader the other day, and I'll get on in a moment, so bear with me. I listened to an interview with Jeff Bezos. He doesn't do very many interviews. I think he was on, who was he on? I forgot. Doesn't matter. Anyway, he said, as a CEO, and obviously he's one of the biggest CEOs in the world, right? He said, as a CEO, and we're all CEOs of our little trading business, right? So you might not be Jeff Bezos or Elon Musk, but you're still making commercial decisions. And he said this, he said, we have to make a couple of really big decisions each quarter. And that's my job. And so he was talking about his route. Someone said, what's his daily routine? He goes, I get up, I kind of drift around a little bit. I putter, I think he said. I read the paper, I do this, do that. Everyone's expecting, I get up at 5 a.m., I'm cold plunging, I'm doing this. It's like, I know that I've just got to make these good decisions. So everything kind of aligns with you as a person, right? So as you, as a person, the CEO of your trading business, if you like, you need to think about, how do I make the best decisions? And we can go into all the other stuff, but from an operational perspective, you want your charts to be as clean as possible. So if Bezos can think like that, that's how we can think. We're not trying to go in there and make, good trades. That's the outcome we want. We're trying to make good decisions. Okay, great little quote here from Mike Bellafiore from, I've got to fill up with books on this desk, too many books. The Playbook. You cannot carp about an exit too early if you have not taken the time to write rules to exit. That's what he says in his book, The Playbook, and couldn't agree more. And one of the things we're going to talk about today is kind of the difference between initiate a potential area to do business and a potential area to manage the trade, and why those levels differ, and how to kind of understand complexity, not complexity, how to understand how to interpret the difference, should I say, between those two. So, many people say, oh, I've exited too early, I should have done this. But if you haven't got a plan, you haven't got a level that you're actually going to consider looking to exit the trade or peel some off, you can't beat yourself up. Anyway, we're trying to attacking a lot of different things here. Hopefully it all come together and you can go away with something actionable and tactical to take into your trading tomorrow for the big old day that everyone's been waiting for. Before we push on, guys, I want to say, of course, please understand you are trading a risky product. you're trading a leverage instrument like a spread bet, like a CFD, understand that margin works very well when it's going in your favor, but it's very nasty potentially when it goes against you. Loss happens fast, risk happens fast. You know, if you're long going into a news number and it just, the floor goes on from underneath it, you're sitting on a realized P&L that, you know, you didn't want. So just be aware of that, right? There's a plus side of it. We're trying to leverage and trying to use our capital as a tool, and we're trying to kind of use it to our advantage. But, you know, please just understand that there is a real inherent risk involved in it. We try to manage the risk as much as we possibly can, but we can't eliminate it. But that's why the reward is there, right? There's a high risk, high potential reward, and just make sure you understand that and understand the product you're trading before we kind of get involved in this type of thing. And also, please only trade with money you can afford to lose. Don't want to hear any stories of people losing more than they really wanted to. Just keep it smart, guys. Okay. So the line clutter problem. Plan is today something different. Tech support, tech allowing, let's say, permitting, better word, tech permitting. We're going to kind of go to the charts in a moment, and we're kind of going to go through some practical stuff and real world kind of processes to maybe you can take home and do it for yourself. By the way, very, very quickly, my name's Mark Holstead. I run Traders Mastermind, been trading for 24 years. Don't claim to know it all that type of stuff. I said it all before. Many of you have been here before. If you're new here, you can see a little bit about me, actually. There's an About Us section. I forget about this, About Us section on a website that I started 5 years ago, I want to say, Traders Mastermind. Yeah, maybe 5 years ago. Yeah, it is. Anyway, so I'm not gonna worry you and bother you with all my kind of biography. But I come from a place of, you know, I've got some experience to share, and I kind of have dealings with other traders, great traders, developing traders, and try and put all that information and share it with you when I can. Unfortunately, Pepperstone allow us to do that. So the line clutter problem. Most traders' charts just full of lines, right? And I say this in the nicest possible way, in that I know that when you put a line on your chart, you do it because there's a reason for it to be there. And there's a difference between a technical reason, i.e. you're being a technical analyst. Hey, there's a support level, and support level is defined as X. There's a high, there's a low, there's a this, there's that. All correct. Tick, tick, tick. Very good. Here's your technical analysis certificate. Off you go. Okay, fine. But we're not trying to do that. We're trying to use the information from a chart to make good trades. And there's a difference. And this is where we have this disconnect as traders very often, is that our technical analysis is sound. It's something that is relatively easy to pick up, right? I'm not belittling it by any stretch of imagination, but it's relatively easy to become a good technical analyst, as it is compared to a trader, right? You can go through all the stuff, you can understand the knowledge, but actually understanding how that translates to good trades is very, very different. So the lines may be valid, but are they useful? And often when we put too many lines on, we create confusion. And actually what we're doing, what we really want to try and do, and you know this as well as I do, guys, is that we just want to make life simple. Like, we don't want this clutter. We don't want any clouding decisions making, any stuff that's going to cloud our decision making, should I say. We want to say, hey, do you know what? Is that a good trade? Do I want to pull the trigger? Yeah. Where's my stop? Here. Where's my risk? Here. That's all done. I'm just making the decision. Because the more relaxed, and I'm not saying we're sitting here with our feet back and we're just clicking away. No. But you and I both know that we tend to err on the side of more intense focus and more pressure and maybe more anxiety and frustration than we do blasé attitude. And so we want to kind of just calm things down, just make it simple, right? And we've all been in this situation where you've done all this analysis, you've been a good boy, you've sat there the weekend, or good girl, you've sat there, you've done your lines, you've drawn this, you've done that, and your chart's looking, oh, you're like, that's a work of art, that. Damn work of art. Every level marked out, minor, major, high, low, close, gap level. I've got the fair value gaps. I've got my, what does he call them, breakup. I've got all this stuff in, right? It's just looking, it looks so beautiful, that. Ding, 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 bell goes. You haven't got a clue what you're going to do. Market goes up to a level. Am I buying the break? Am I selling it? What am I doing? I say level. Okay, I won't do anything. Comes up to another. Well, yeah, there's a key level. That's a high. And the confusion then comes into play. It's like, well, I might have done all this, but has it got any relevance and value in the trading day? No. So we want to do something that actually has actionable and tactical value. And we don't want to be unsure why the line is there. We want to get to the point where, hey, This line is here for a reason. My chart is sacred. I've got that here. I know exactly what I'm going to do at the line. Now, I might add, that doesn't necessarily mean I'm definitely going to buy on a break or sell on a kiss of the line. No, it means that the filter is checked. We've hit this level. I now may have more things to consider. You may have more things to consider. What's the time of day it hits that level? How far is the pin bar through? There may be stuff more, but it's an area you consider that you may want to do business at, right? Look at this example. Again, we're going to go to the proper charts in a moment. Euro USD, hourly chart. These are all valid lines. You've got highs, you've got lows, you've got this, but it looks a mess, right? And so when you see an actual trade setup come, which a couple of days ago, you kind of got a wick below and a kind of Wyckoff spring type rip back up CPI number, you don't know what you're doing. If you're long on that, are you closing at the first level? Are you closing at the second level? Are you initiating a trade? You just don't know. And so all this clutter just adds confusion, even though it's valid. And so what we want to do is we want to get to a point where we're super strict, and we're not just putting every line on that's valid from a technical perspective. We're putting the lines on that matter. That's an area that we're potentially considering doing business at, and that's key. So this is the core question to ask yourself. For every line, every little tiny thing that goes on the chart, would I initiate a trade here, or would I consider initiating a trade here? Is probably a better way of putting it, right? We're not saying we're definitely going to buy the break or sell the fade. I mean, it's not a mean reversion play. We maybe, but would I consider doing something, right? Because if you go back and look at all this mess here, it's like, well, the 117s, am I going to fade that? Am I going to, you don't have a clue, right? There's no idea there. You've got no real structure. It's just there for the sake of it. Or the second question, because I think there's, and we'll dig into this in a moment, is would I consider initiating a trade here? Is this an area to consider doing business at and making a risk-based decision? If it's not, then it doesn't want to be in my chart. If it is, fine. Then I'll give you space on my chart. The second side of this is, will I actively manage an open trade here? I.e., if I'm already in the deal, if I'm already in the trade, am I going to do something, or am I going to assess the conditions to actively manage the trade? Am I going to pull my stop up once it breaches a level? Am I going to peel off some of the position? Am I going to add to the position? Am I going to consider hot closing the position? You know, these are the only two reasons why we want these lines on our chart. Anything else is like this. You shouldn't. I believe, and again, you know, I'm not going to tell another man or woman how to trade. Your business, your money, your risk. You understand. You can, you know, decide how you want to take this. But I honestly think that we always have more information than we need, and so the game is about peeling things away. And if the answer is no, then we delete it, right? We delete it. So I think there's two types of line that matter: the entry level and the management level. And as I say, places that you consider maybe breaking out, breaking through a level, it's a level above, it's a resistance, you kind of look for a follow through and momentum ignition type trade, or it's a mean reversion position you're going to reverse that. That's all really you can do at a level. You either go with the trade, a trend, or you fade it. That's it. And it may not, you're not be committed to it, but you're going to consider doing it. Management, scale, trim, add, like I said. Okay, so before we hit the charts, let's think about what I call the first tier levels, because there are multiple different tiers, if you like, of line on your chart. And it'll become clear in a moment. What I mean by this is, I call the first tier levels is a level that everybody knows. Everybody's watching that level. It's not something you've decided on the fly. It's not a kind of intraday support that's developed. It's not a multiple touch in the middle of a range that's valid. It's a level that everyone knows. Everybody knows today's open. If you're talking about, you know, a stock market open, right? Or an actual stock. Everyone knows the close. Everyone knows yesterday's high, yesterday's low, regardless of what market you're looking at. That is a definite, there's no ambiguity. The print is the print. Everybody knows these. Everybody's looking at these. Everybody also knows, and if you don't, I think this is very important, especially with the stuff that's coming up, the price we were at before news hit. So before CPI hit, where were we? So before the market changed potentially its valuation, where were we? Because that is the real pivot point that's of interest. If price was sitting here, then we had out a new, let's see, the way I say valuation is if something comes out with CPI that's perceived bullish, then there's a bullish sentiment to it, then okay, we've got new information that has repriced those stocks or those market or that dollar, whatever it might be, or the gold, whatever it might be. And so then that level becomes important, because if we come back through the level, all the people who were involved in it before then are kind of scratching their heads, and that's a fade trade. I'm getting ahead of myself, but you get the idea. There's these levels where everybody knows, and actually, there's no ambiguity to them. There's no second guessing it, and that's important. Everybody knows the highs. Everyone knows the lows. Everyone knows. And also, you've got to remember you've got to remember that institutions are looking at levels that we don't. And I'm going to kind of show you some of these in a moment. But, the opening, the month open, the year open, if you start the year, the week open, running a VWAP. We'll talk about anchored VWAPs a little bit. I've done a bit more depth with it. We'll talk about anchored VWAPs from the point where CPI came in, and why that's important is actually if there's a buying program that's spread over 4 or 5 days to accumulate, then they're going to be measuring it based on what the price was before CPI. Don't overcomplicate things yet. We're kind of planting some of those seeds. All right. So second tier contextual levels. So what I mean by this is that these are levels that you and I both know start to appear during the trading day, during the trading week, during a month, whatever year, whatever it might be, right? It's an emerging support or resistance level, and support level being a level the price has struggled to go through, a floor, a resistance level being a ceiling that's just struggling to kind of banging its head on it, right? So we kind of understand this, and these can build intraday, these can build intra-week, etc. And these become support resistance zones that are important, but it's only one that you perceived and maybe others, right? It's not that everybody knows this. Not everyone's got that on a chart, but the high or the low, not everyone knows it and it's definite. And there's also a little bit of room for error, right? You might put a line at, $50, that's such a random number, $50. Others might put it at 52 or 49. So it's not always as clear cut, whereas the high print was 58.02. That's it. It's not 58.03. The high print was, it's a fact, 58.02 is binary. And so this is a second tier level. I'm not saying there's any reduced validity to these levels, but what I am saying is we must understand when we put these levels on that not everyone is going to know about it, right? Not everyone is going to have the same level there. I'm not saying that it's not as good, but we must just appreciate what we're doing here. Okay, we know that fine, we believe there's support there, so our thesis is buyers have stepped in at that zone as prices kind of come down. We've seen buyers step in. We've seen buyers sellers back off, buyers step in, or sellers have tried to push, but buyers have just held, and eventually they've given up and it's kind of popped back up. And also, one word on that, by the way, if you've got selling going down and down, what do sellers want? They want the highest price possible. Unless you're talking about market manipulation, triggering stops, another topic for another day, you want a higher price possible. But the only reason you'll pay sell at a lower price is you don't believe you can get a higher price, right? That's kind of how the market works. It's the auction process. So it's 100, and you're getting 100, you're getting 100, getting 100. You're like, fine, that's great. I might see if I get 101. You don't. What do? You come back to 100, right? And this is someone who's working an order. It's all about kind of order flow dynamics and price action here. When you start not getting filled at 100, what do? You say, well, I'm going to get this order done, and I go 99. You start getting some filled, then nothing. Well, 98, 97, I'm not getting nothing. I need to get this order done. 95, 4, 3, 2. You're at 90. All of a sudden, you're getting filled. You'll back off a little bit more and say, well, I'll see if I can get 95 again. No. Okay, come back down to 90. So that's how the kind of price ebbs and flows. And actually, if we're going off topic slightly, it's worth thinking about that. When you kind of look at the chart, it's worth thinking about, okay, so what is the seller actually doing here? Why are they selling here? Very often when we hit those support levels or resistance level support from the kind of floor, it's because sellers are, they're getting filled quite a lot, and they go, you know what, I think I can get filled higher, let me back off. And we kind of get a natural bounce back up. That's why we get these ranges. Anyway, by the by. So we want to, understand the difference between the kind of first tier levels and the second tier levels. And back to the original point, the litmus test for any level, am I likely to do something here? It sounds simple, but it just helps keep it clean, right? It helps keep it clean. Yes, yeah, great. I'm interested in doing some business here. I might not. It might not be, and you might be like, yeah, definitely I'm buying a break at this level. It's done. I know my risk. I know what I'm going to do. Absolutely, I'm in at this level. Or I might be like, no, I don't definite, but I will consider it. That's fine. it's got a place on your chart. It should be. That's how it works. If it's not, you're like, you know what? I don't actually care if it does that. It's not a trade I want. I don't think there's any advantage there. Then take it off your chart, because all you do is you create clutter for your brain. Okay, so 2 more slides, and let me go to the charts. Hopefully we'll be able to sort this out. So, you know, if we think about VWAP, right, there's what I call dynamic levels and static levels. And today we're going to talk mostly about the static levels of support, resistance, open, highs, lows, close, and how we filter those in a moment. But VWAP, I think, is one of the few things that is an important dynamic level. You know, everyone who's an institution or an algo is looking at VWAP. So a session VWAP important, an anchored VWAP anchored to a high or low, example at the moment. It gives you an idea of what the sentiment is and when it's shifting. And so a lot of people use moving averages, and that's fine. Nothing against them. Just know that a VWAP to me is a first tier level that everyone is looking at. There's no ambiguity there, because institutions use VWAP, algorithms use VWAP as a benchmark. Just know that majority of people know what the VWAP is. Whereas a moving average, some people are using a 5 period moving average on a 1 minute. Somebody on a 9 period on a 1 minute. Somebody using a 50. You get the idea. There's so many different variables. I'm not saying they can't be effective, but again, first tier, second tier. VWAP to me is very much in the first tier, and moving average or anything like that is very much in the second tier. Now, trend line. Again, I don't have anything against trend lines for sentiment. And listen, I know traders who trade trend lines super well. You know, they're way better than me at it. They perceive them in a better way. They kind of trust them much more. Perfect, that's fine. But for me, I think that they're easy to draw, right? If you're slightly off, it ruins the trend line massively. And sometimes you've got to kind of make the decision. So for me, a trend line is just a bias. It's a bias in one direction. Like, okay, if this breaks, maybe there's a sentiment shift, but I don't think it's important as, okay, here's a clear line. We've broken through the prior day's low and we've absolutely cascaded. To me, that's more important. But you know, we'll go through that in a moment. Okay, so I think horizontal levels are cleaner. You can do it, repeatable. If you cleared them off the chart, put it back on again, it would be in exactly the same spot, same spot, same spot. There's some ambiguity there, but I think trend lines, you know, a couple of degrees out, you can be way out. And you can also look at how the breaches occurred. So with the pin bars that go through, how often, how long did it stay under that key level, above it? You know, I think that they're a little bit cleaner. Okay, let's see if we can shift the screen sharing, because I want to share with you. This should be easy, of course it is. Making a meal out of this. All right, let me bring over here. Yeah, let me bring over here. All right, you guys should all see trading view. Yes, you can. Good. Okay. So let's go through a process, right? Let's imagine that we are looking at a market brand new. Let's clear off some of this stuff and let's go through this together. So we've got the Dow Jones here, right? I've used the Pepperstone CFD equivalent. You could use the YM. You could use anything you prefer, but let's just use this. Now, we always have to look at things through the lens of, you know, would I consider doing business here? So as we look at this, we go, okay, is there a genuine high up here at this this prior high from the CPI day? Yeah, that's been the all-time high. Okay, fine. What else is interesting? Now, I'm not interested, by the way, in going right back here, because do I think the market's going to get there in the next couple of days? No. So I want to zoom in a little bit, and I want to say to myself, okay, that's an important level, right? Wait. So we chart is sacred. I get my words out there. The chart is sacred because I so believe that this is true. The chart is sacred. However, we can start off, but before we finish, we can peel the levels off. So we're all agreed that high is, everyone knows that high, right? It's there. It's in print. It was a CFD. It was a CFD day. It was a CPI day. Fine. However, what else is valid? Well, you know, after we had this run up at the end of August, we've not really done much. CPI popped us out. We've drifted back, and we're kind of here. Now, I would argue that this is a pretty decent level here. I would say this had 1, 2, 3, 4, 5 touches, and we're coming back to it now. So I would argue that's a pretty decent level. Okay. And I would also argue that maybe this is a pretty decent level here, right? It's not tier 1 level by any stretch of imagination, but it's pretty decent because we had 1 touch, 2 touch, 3 touches, came back, it became support, was resistance. I think that's a pretty interesting level. Now, we could go further, we could start drawing levels down here, and we could go further, and we could start drawing levels down here. And these are all tier 1 levels, right? It's the low, everyone's interested. And appreciate CFD slightly different from the futures contract, but we'll just use this for a kind of example purposes. Okay, but am I really interested in that, doing business there? Not yet, because it's not going to get there. Famous last words, Mark. Who knows, with the market, but it's probably not going to get there. Delete it off. Am I interested in that? Probably not. Delete it off. Okay, so now I've got three areas here. And actually, you know what? I've been a bit eager there. Let's leave that one on. Okay, so we're agreed that's a pretty decent second tier level, pretty decent second tier level, pretty decent first tier level. Okay, now many people would also do this, and they would say, I've got a trend line there. In this case, actually, it's reasonably clean. It's reasonably clean. But for me, I'm only looking at that trend line and saying, actually, you know what? It's a bias. It's an uptrend. It's not the most aggressive uptrend we've ever seen, but it's interesting. I don't want to keep it on my chart, though. However, some people might trade the break and the pullback, and there's nothing wrong with that. But for me, I don't want it on the chart. But I know that it's there. Okay, so now we go. Okay, we've got 4 lines. That's all we've got. Now we have to remind ourselves, why is the line there? Now, assume we don't have a current position in the Dow. Then the question becomes, are any of these lines places we want to do business at? Let's run through it together. And again, hypothetical. We're not this is not trade scenarios, definitely not advice. This is just going through an example of any chart that could be and working through the process of adding the lines to your chart and then thinking strategically about whether these are going to support your decision making. That's it. So we've got our lines on, and you guys might be shouting at the screen, going, he's missed one, there's one there, there's an obvious one there. Okay, fine, maybe, right? But we probably all agreed that these are reasonable. So now I say to myself, okay, and we've got Fed coming up, so that's a nice little addition to the mix. Fed coming up tomorrow, and we've got some data. Where am I going to be interested in initiating a position? Okay, that top line there, the all-time high level. Would I want to initiate a position there? Maybe. Would I want to buy as we break through the level? Probably not initially. What about if we broke through late in the afternoon? If we broke through on day 1, i.e. Wednesday, and then Thursday we sold back through, would that be interesting? Yes. I might be interested in a kind of A to B type short if we had a failure there. So, and again, this is me, personal, just kind of running through stuff. So that level becomes interesting. If the price decides to go through on Wednesday, and then maybe Thursday we gap lower, well, not necessarily gap with CFD, but if we gap lower on the stock market and then start to come back through, would I initiate a short there? I might do. I don't think I would, depending on how far we go through. I wouldn't be too eager because we're still on an uptrend, and I don't believe that necessarily it's going to be an absolute cascade. But you know what, I might do. So actually, you know what, that earns a place on my chart. That earns a place on my chart because I think it's tier 1 tick. I think that I would potentially initiate a trade there. If we broke out, pull back to it, I might be, so I think it's got some validity. Okay, great. That stays on my chart. Does this one? Don't want to remove all of them, do we? Does this one? I'm using the different mouses while I'm all over the place. Does this one here? Well, you know what? We're at that level. And so I'm not really that bothered. And you might be like, that's a pretty big level, Mark. And I'm like, yeah, but I agree with you. I don't disagree. But think about, is it an area I want to do business at? Well, if it was, would I not want to get in now? Would I not be doing something with it now? Well, yeah, but Mark, what about if it goes up and comes back? Not for me. And it might be for you. But my question is, if I'm going to get involved in a trade, especially considering we've got FOMC coming up that's potentially going to move the market, I want to see levels that are further away from price tested and come back, or tested, breach, held. I'm not interested in levels that are right at price. If we kind of drive up and come back to here, I'm not that interested. Now, so for me, that goes. And you might be like, oh man, that's a really big level. And I don't disagree, but this is the point. Like, I'm going through my process of whether I'd consider doing business at that level. And based on what I know and what the cycle of earnings of economic data and where we are positioned in the week, that doesn't play a part. Now, it doesn't to say, not to say that maybe tomorrow, if something crazy happens this afternoon or tomorrow morning, I might adjust that, and I might, if we're starting to do business up here, that might come into play, and I might say, actually, you know what, if we come down and we kind of hold that level, then maybe there's an opportunity there. But for now, gone. Even though it's an absolutely beautiful level, I don't disagree from a technical perspective, that is a beautiful level, but it's not a level I'm interested in doing business at, so I don't want it. Now, what else? Let's go through this quickly and we'll do some others. This one here, maybe, but it's not really deep enough. If we kind of go down to here and stagnate here, I don't like it. What's more important? Why would I want to do business? I quite like this. This is almost a tier 1 level for me. If we started doing some business down here and wicking and pushing back up, and we started doing this type of thing, and again, it's all hypothetical, right? I'm not kind of suggesting anything. That might be interesting. That might then say, okay, that level's interesting. Same with this. If we started coming down here and doing business here and then doing a Wyckoff spring type trade, I quite fancy that. And so now what have we done? We've got the whole day, the daily chart and multiple months in there, and we've got 3 decent levels. And 3 levels we're considering doing business at. And for you, they might be completely different. And that's the point. It's like, it's not here to say this is the levels you should have. Your level might be down here. I don't want to buy the Dow unless it comes down here and wicks through that level there. That's a tier 1 level. I mean, that's fine. I don't want to buy the Dow. I don't want to even look to get involved in the Dow unless we were up here at 48,000. And then I might consider doing that's fine. None of this matters. Okay, so now if we go down to, let's go into a 5, right? Let's go into a 5. So we've done that process. Now we go and we see the levels, how they appear on our 5-minute chart. And we say, yeah, you know what? Do all these levels matter? If we're an intraday trader, maybe they do. Maybe you do the same process there and you say, well, actually, hang on a second. This was, and again, it's slightly different for the stock market, for CFDs that relate to the stock market, your Dow, your S&P 500, your NASDAQ, your DAX, etc. Because it's important where the market opened. Like today was quite interesting, right? The market opened pretty much as it kind of, where was it here, rolled over, and it's really struggled. And so a big level might be here. You might say, hang on a second, this is a big level. I'm interested in initiating a trade if we get to there. Now, I wouldn't, right now I wouldn't, but okay, let's hypothetically think we would. Let's hypothetically think we're trading this today where we initiate a trade, okay? I would be interested as a mean reversion type day if we start to push back up here. That would interest me. Consider doing some business there. Likewise, down here, if we drifted down here, what time is it? 6:30, before 8 o'clock, say. So I'd start to mark that off. We started to wick through and push back up. I'd be like, you know what? That's an area I'm considering doing business at. This is no longer valid. I'm not interested in this. These two. And again, I'm being extreme. You get the idea. And now we go a little bit further and we say, okay, why do they keep moving it? Because I'm on the wrong thing. That's why. There we go. Anchored VWAP. Okay, so now we anchor our VWAP and we say this is the VWAP for the day. Okay, interesting. So am I want to do any business there? No, I don't. However, I might want to manage the trade there. If I pick up a long down here, if that was my thing, and I want to trade mean reversion, I believe the day before FOMC was a mean reversion type day, I might say, okay, I would pick up a long down here. Would I want to manage the trade at the VWAP? Damn right I would. That's probably the target, actually. And so that now commands a place on my chart. Nothing else does. Even though that's a reasonable level there, even though this is a reasonable level here, even this little tiny level here, they're not on my chart because I don't want to do business at them. Now, might that shift if I do get short, or if I did get long, or whatever it is? Yes, it might. I might adjust and I might put a level on based on where I want to manage it. But at this moment in time, I don't want to have this thing cluttered up with scores of lines, dozens of lines, because I'm not going to do anything at them. I'm not interested. The last thing I want to do is get sucked into a trade because it broke a tiny level. Now, if you're a really super hyper scalper, this might be the most important level to you, because if it pops up and fails, you might be like, I want to short it. I want to keep shorting it. I want to keep shorting. That's your decision. But again, the only reason you should have the level on the chart, I believe, is if it deserves it, because it's sacred. You know, this is how I make decisions. This is how you make decisions, right? We don't want to have anything on there that makes it more complex. You know, if this is why, by the way, CEOs, top business people only have a few people that report to them, because they want the most interesting, useful data that's going to help them make a decision. They don't want to sit in a room with 1,000 people giving their input because they can't work out what matters and what doesn't. They say, finance, I want you in the meeting. Marketing, I want you in the meeting. Compliance, I want you, whatever the hell it is, right? And I want to make a decision. That's what we should be thinking, I believe, when we're trading. It's like, hey, any more people in this meeting is going to make it difficult. If we've got 100 different people in, we've got 50 different people in, even got 12 different people in, all saying, how can I understand if that voice is valid or not? I've got to then think more, as opposed to saying, hey, you're in the room because I value your opinion. Your line on the chart, your line is on the chart because I value where you are and I value your opinion, if you like. And so I'm going to potentially do something because of that information. That's exactly the way to think about it. You're in that board, like, hey, these are my trusted advisors. I know because I've picked the ones that I'm going to listen to. I'm not going to ignore because they're interesting. They have valid information, just like this on the chart. And so as we go through, you start to do this. What else was I going to show you? I'm going to show you cable. Let's just do a run through on cable. And this is quite good actually, because I don't really trade. I haven't traded cable for a long period of time. So we can do this together. All right. And we've got some time. Okay, so let's run through this. Let me just make sure that we're on the right one. Okay, right. What are we looking at here? And you can kind of go through with this. You can go through this with me. Tier 1 level, agreed. We've got to agree that that's a multi-month high, right? That's tier 1, no doubt about that. Everyone's watching that level. To the couple of pips. Tier 1 level, tier 1 level, tier 1 level, tier 1 level. A couple of kisses of that, great. Now we're talking. All right, so do we care about any of this stuff back here? Nah, not for me. Too far back. If we get there, I'll worry about it then. So I want to zoom in a little bit. Let me zoom in for a couple of weeks. Now, if you're trading for multiple months, you might do, and you're on a weekly chart, fine. I don't care. I'm just doing it from my perspective. Right. What else is a good level? This is a really good level. Look at that. Bang, bang its head there. Bang its head there. Bang its head there. We've only just broken through today. We wicked through like it might fail. And now, cables kind of really started to pick up a bit of steam today. Okay. I think that's a decent level. What else is a decent level? Is this a decent level here? Yeah, pretty good actually, because there's one kiss. Fine. Yeah, well, I'd happily have that on. What about this level here? Is this valid? That's not bad. 1, 2, 3, 4, 5, 6. We're getting busy. We're getting busy, boys and girls. This is a little bit busy, but they're all valid. Oh, there's another one there I've missed. You can see how we can get a little bit carried away. I know I've done it a bit intentionally. You can appreciate that, but they're all valid. But we go back. North Star, are these any that I'm considering doing business at? And again, we've got to let's put some realism into this. We've got data coming up tomorrow, so let's imagine that. Okay, tell you what, let's not. We did that with YM. Let's not. Let's consider this as a normal day. We have no expectation of data. What's still going to be on our chart? Okay, so this is too far away, right? I'm not interested. If I'm interested in doing something soon, I'm not interested in that. I'm not interested in that either, because I think this one is more valid than this one. Why? Because that's more recent. We've had 2 touches. I think that's almost a tier 1 level. And in fact, it is, because it's a low everyone knows about. This one, no, because actually think about this. If price got to here, would you initiate there? You probably wouldn't. You'd rather, if you were initiating a long and a fade trade or even a break trade, you'd probably wait for the more important level, the level that everyone's looking at. So that's gone. See you later, pal. Don't want you on my chart. You're cluttering up. You're making a little bit of noise for me. Right. What else have we got? Okay, we've got this one here. Okay. This one here, too far back. Not interested. Get out of it. This one's more interesting. Okay. What have we left with? Now we've filtered it down into 4. Do I want to leave that on? Let's come back to that. Let's look at these two. Too many, too close. What's more interesting? Okay. Now this level is interesting because this is kind of where we've initiated a break. So if you are a pullback, break and pullback trader, you might be considering this slow drift back and then a rally off. However, this is real world. Let's look at this. Are we not still in the range, multi-month range? Is this not still the most important range we've got here? I don't know why I keep clicking. I think it's because I'm using this different mouse. Are we still not in this range when we have, this is the high, this is the low? We are. And so is this a breakout type trade? Not really. So this is where your style of trading comes in. Peter, Daniel, you guys know, a lot of you guys know him. he probably wouldn't be interested in this. He's more interested in a break of this tier 1 level up here and pull back and then go. This is still mid-range, right? And so it comes into line with how you want to trade. Now, if you like to trade a little bit more actively in a range, you might say, okay, well, let's get rid of these. I'm not interested in that. Where do I want to do business? Do you know what? If we fail and roll down, I'm interested in shorting this for maybe a rotation back to the midpoint. I don't like that per se, but you get the idea. So you're kind of then saying, all right, I want to get rid of this. It's got to be one or the other, which is more what I'm going to do. Maybe you say to yourself, even though that's valid and I like that level better, this level here is the one I want to do business at. That's always the litmus test. Why? Because actually, I think even if we come back to, let's say it's on a short, let's say you want to take a short failure, but it rolls back over. Let's draw that and so we can visualize it. Let's imagine you wanted to take this and you wanted to get short around here. Oh God, what a mess. You can see that. You might say, okay, well, actually, you know what? That level there is more interesting to me than this level here because I want to be sure. And so again, even though I think, and you may agree with me, that level is more important because we've had multiple touches, right? And you might say, okay, but consider initiating short. You might even say, you know what? I don't want to initiate a short unless we broke under that low. And so then the level becomes important to where you want to do business, not just from a technical perspective. I hope that makes sense. And so now we can clear off all the stuff that we don't want. And we've actually come up with, and I don't particularly like this trade, I have to say, but we've come up with a thesis. And our thesis is this: if we fail and roll back and close below there, I'm going to initiate short, and this level is there because I think that's my target. That could be your idea. Or I want to, next one, if we break the high, pull back. And so the level is only there because you're considering doing business at the level. Nothing else matters. You can always add stuff, right? But you only want to put it on there if it has a place on your chart. Your chart is sacred. It's how you make good risk-based decisions. Only let it go on if there's something you are going to consider doing. Otherwise, you're going to rush into stuff. You're going to overthink things, and it's not going to help you out. Right, let's go back to the charts and just finish this off, shall we? Okay. Okay. It could be smoother. I know. Could be smoother. Let's go. No. Let's exit that. You're still on my chart, aren't you? Present. Let's go full screen. There we go. All right, back in the game. Could be quicker, could be smoother, appreciate it, but we got there, right? So horizontal levels are cleaner. Okay, so where are we now? Let's go to kind of wrapping this up and kind of going some drills that can maybe help you. Practical rules for drawing levels. I think pre-mark them before you get into the trade. I think it's the worst thing to do when you're in the heat of the moment considering stuff. You want to take as much of the cognitive load away from you as possible. As I say, levels with a clear purpose, areas you consider doing business at, review and clean them. Like if something changes, and this is a perfect week to think about it, if something changes because of FOMC, do I still want those levels on cable? If it suddenly rips off the upside, then I probably don't want to be initiating a short unless it's a proper trap. I might want to trade the momentum, look for a momentum ignition type trade pullback. Okay, and we want clarity, not, I think it's a great sentence actually, clarity, not completeness. We're not trying to win Technical Analyst of the Year award. We're trying to win Trader of the Year award, actually. In fact, we're not trying to win any awards. We're just trying to make good trades and get the equity curve from bottom left to top right. So, key takeaways, good timing. Every line has to earn its place. Remember that one. Check. First tier, everyone knows about those. Second tier, contextual. Nothing wrong with them. Just understand you are maybe the only person looking at it. Obviously, with some of those bigger high time frame ones like we did on the daily, that's not going to be the case. But if you're down on a 1 minute chart, you might be the only person looking at it, and you might see it and it's genuinely where a buyer stepped in or a seller backed off. Fine, there's validity there, but is it an area you want to do business at? VWAP, anchored VWAP, great places to kind of plot and think about where you might want to initiate a trade or might want to come out of a trade like we talked about that VWAP there, anchored it to the opening price, the 2:30 p.m. UK time US Open. You know, we're talking about the A to B trade, maybe do that. Less clutter makes life a hell of a lot easier. So something you can do. Strip down your chart to only the main levels. Really consider writing down why that level is on your chart, you know, to justify it, and kind of go through the past week and say what levels actually mattered. What levels actually mattered. Okay, so I'll take some questions, guys, if you have any. We've done it a little bit different today. I hope you liked us flicking around from TradingView to the slides. Let's put this up. And I thank you, ladies and gents. You've got some questions, haven't you? Anthony US, I'm going to put up a page with all the videos on, and you guys can just laugh or not, as the case may be, with the Pepperstone, Aston Martin, Aramco Day. Theo says, good evening. Good evening, Theo. Sandeep says, when you talk about doing business with horizontal lines, and of course less is better, what are your thoughts on using the current day and previous day's highs, lows open? Yeah, absolutely, mate. Absolutely. You know, if let me put you over here. I don't like talking to you when you're over there. Hopefully it's better. Okay. Sandeep, that's a really good question. You know what? That everyone's looking at those. You know, how often do we see price run through prior day's highs, back off, run through prior day lows, back off? Yeah, the current day and previous day's highs, lows, opens. Now, listen, again, you have to ask yourself that the current high is important. The current low is important, but would you consider initiating a trade at that level? If the answer is no, then even though it's important, it shouldn't be on your chart. You know it's there. You know where the current high or low is, right? You maybe don't need it on your chart. Something I think that people fall into the trap of is using indicators to load up open, high, low, close. Yesterday's high, open, high, low, close. Pivots. All very nice, all very handy. Something that Mr. Livermore didn't have back in the 1920s. But what it's doing is it's robbing you of not robbing you, it's polluting your chart unnecessarily. If you want to initiate a trade at the high, then you take over everything else and you say, hey, I will consider buying a breakout of that high. I like it. Or I'll consider fading that gap fill. You know, everyone knows it, everyone sees it. But again, the litmus test, the big question for you, Sandeep, and everyone else is, am I going to consider doing business at it? Because that's the question. And the trouble you have is you have everything on, they're all valid, and your brain is saying it's valid, it's a high, it's a prior day's high, it's a current day's high, it's an overnight high, it's a gap for, yeah, but do you want to do a trade at it? And well, no, because the risk reward doesn't stack up. There's no trigger, time of day's wrong, all the context doesn't really work. Okay. Sandeep also says, many thanks as always, appreciate you, Sandeep. I do enjoy your webinars, he says. I enjoy presenting them. I have to admit, I really enjoy talking about trading. You think after 24 years, I get bored of it, man. I love the business. I love the markets. I love trading. And I like the fact that you guys are excited about it as well and kind of get engaged in it. You know, it's the best business in the world, isn't it? Let's be honest. Sandeep also says, you've got a triple question. Last question, Sandeep. Have you used rolling VWAP before? If so, just wondering your thoughts. It tends to follow price action more closely compared to the standard VWAP. I'm not sure what rolling VWAP is, Sandeep. But I'd be careful, unless it means something very similar. But a standard VWAP is what the institutions use because it's a volume-weighted average price, so it can't vary. It's like how much volume was done there, what's the price, and it's weighted to volume, so each one adds incrementally. You know how the VWAP works. So I'm always cautious about going too far off piste because I want to align with what the algos are programmed with. I want to align with what people perceive as a benchmark. You can go on my website, actually, you go on tradersmastermind.com. I did a really big deep dive. I think we did one of these where I talked about the VWAP and how it's so important. It's the one thing that will stay on my chart. Maybe you don't initiate a trade at it, but it helps with the context as well. Are we trading a lot under the VWAP, above the VWAP? In other words, sellers perceive the VWAP as value as it pushes back up to it. So I'm always a bit careful about going too far off piste. But yeah, check out. If you go tradersmastermind.com, the webinars section or the trading strategy section, I can't quite remember, but did a really big deep dive on VWAP because I think it's something that's very important. I've had it on my chart for a long period of time. Anthony Valone says, Lance Brightstein. I actually thought it's actually not Anthony at the moment. I thought it said Lance Brightstein as the actual person asking the question. I thought, let's see if I can help you, Lance. He says, often talks about using anchored VWAPs on higher time frames as a way to discern where traders could possibly be trapped, but he trades stocks. Do these same concepts apply to the Dow or even useful for an intraday trader on the 1 minute chart? Anthony, the way I like to use anchored VWAPs, and that's a brilliant question, pal, as you're dipping into indices, hopefully this helps you, mate. The way where I like anchoring VWAPs is very few places, but here are them. It's the start of a month, the start of a quarter, maybe the start of the week if it's been particularly busy, or more likely the point in time where the market fundamentally changes valuation, i.e. FOMC tomorrow. Like that point at 7:30 UK, wherever that is your time, what is it, 2:30 Eastern, sorry, not quite your time, Eastern time, then that's where I would anchor my VWAP, and I'd like to see how price develops from that. Why? Because that point is important. As the start of the quarter is important to the funds, as the start of the month is important to the funds. I know others anchor to the highs and lows, and I see the logic in that, and I wouldn't dissuade you from doing that. But for me, I just don't particularly like to do that, but I understand the logic in it. And a lot of people will anchor at the lows, anchor again at the next low, anchor again at the next low, and use it as a kind of a filter. Absolutely fine, don't have a problem with that. But I prefer to anchor at a place where everybody is kind of interested in. And for funds, it's the start of the quarter, it's the start of the month. It's where we were before the CPI number came out that blew us away, or we got a surprise 50 base point cut, or whatever the hell it was. Though that to me is kind of an assessment of value of the institutions are looking at, and if they're trying to work orders and positions over a period of time, then they're going to use that and say, well, hey, you know, as price starts to unwind a bit, can we get a bit more aggressive and things. Okay, so awesome, great questions coming in. Let me make you a little bit brighter, people. Thanks, Anthony. Thumbs up. It makes sense, pal. Gary says, like your suggestion of tiering the importance of levels and not being obliged to trade all of them selectively. Yeah, Gary, that's really the kind of the TLDR of the webinar, right? Is you know, don't cluster. They're valid. They are all valid, and that's what I'm saying. As a technician, if you're a technician, yeah, you get a tick in the box. You get a gold star. Gary, well done. You know, you've got technician of the day. Like, well, okay. Bank account, like that's kind of great, but I'm not here to get technician of the day and get a gold star. I'm here to, you know, make great trades. And I think that's the distinct difference between the two. Felix, great concise presentation. Thanks. Appreciate that, Felix. You're very welcome. Do you consider grading the ranges between the lines, like in terms of discount and premium on the high level time frame, and then only consider trades long and short accordingly? Great question. That's another level, and you're right. Very often, I think it makes more sense to actually box the levels as not necessarily a strict level. Now, if you're tier one, be careful, because everyone knows the high, and boxing it is a little bit different. But yeah, sometimes you might say, I still want to initiate a trade, but I want to make sure it goes through with a buffer if I'm on breakout. So maybe that's going to be a box there. Or, hey, if we just wick through and we're still within the box, I'm interested in maybe doing business. That becomes a little bit more of an operational consideration of, hey, that level matters, but how much plus or minus, when you say premium or discount, that level matters. You know, am I not? Let's run through a kind of hypothetical example here. I won't go back to the charts. I'll use a good old pencil and pen, and we can do imaginary things there. There's your level of resistance. Wow, we're professional here, aren't we? Your price goes up. You might say, if it goes past that level, if you can see it on my Union Jack, it goes past that level, I'm not interested. So if price comes up and kind of stays there and fades, trade on. If price goes right the way up, you're like trade negated. So yeah, I think you could possibly do that, and that would make perfect sense. That comes into an operational consideration of the trigger to me. Okay, Ruben. Hey Ruben, how you doing, pal? It says, Mark, it's Ruben. Thanks again for today's session. I really connected with your points on not cluttering charts. Good, and focusing on meaningful areas to do business. Would you be able to walk us through how you'd apply these principles to pound Swiss on the 4-hour daily time frame right now? I'd love to see which areas you consider meaningful on today's context and how you keep the chart clean. You know what? I would, Ruben. I haven't got that much time to do it, but you know what? If I'd have looked at it earlier, I would have done that for you. If you'd like, here's what I'll do for you, Ruben, as I hate to say no to anybody. If you want to do your own research on the chart and you want to send it to me, I will review it and give you my perspective, whether you kind of take it or leave it type of thing. I'll do a Loom video, brief, keep it short. or if you want to kind of send me a screenshot and say these are levels, I reply to you. How about that, mate? Because I think we're going to run out of time in a bit, and I want to keep it in a one point, but I do want to help you out as well if I can. To do that, reply to my daily email. If you're on my daily email list, so I think you are, tradersmastermind.com, sign up for the email, reply to that email with, hi, it's Ruben, and Armand, my guy who deals with all the admin, will send it to me, and I'll give you some comments and feedback on it. If that helps, hopefully that helps, pal. Right. What else have we got? Stephen Otto says, when you drop to the 5 minute, once you reach a level you want to do business at, what kind of strategy are you looking to decide on a break of a level or a retrace from a level? Yeah, that's a good question, Stephen. That comes into more of how you're framing what your idea is, and when you build the idea before you put the level in, right? So you think of the market regime and you say, for example, if you're a trend trader, you only want to buy pullbacks, right? And so your next question is, well, where do I buy pullbacks? Which is the level that I'm interested in buying a pullback at? You're not looking to sell a breakthrough. You'd only be looking to do that if you're a mean reversion trader or you're looking for a complete fade. So the idea here, not to go into kind of too much complexity, I've kind of covered this a little bit more. If you have some time, Steve, you go to my website. I've got some webinars there. I don't want to dismiss the question because it's good, but you kind of have the idea and the theme of what you want to do before you go to the levels. So, hey, I'm looking to fade this market if it fails. Okay, what level at? And what level you can consider initiating a trade at? I think it's wrong, personally, to have two angles of attack, i.e. I'll either buy a breaker or set a fade. I think you do one or the other. I want to get long on a break at that level. That's the level I want to do business at. That's it. If it fails, fine. I'm not interested. If it wicks and goes lower, I probably wouldn't take it. Or if it wicks and goes lower, you get stopped out. Fine. I think that, you have the trade idea and thesis, and the level becomes extra thing that you peel in to kind of fine tune your sights as to where you could consider initiating that trade. Robert Reed, how you doing, buddy? How much do you consider daily ATR when drawing levels? Yeah, you know what, Rob, that's a good question, and I do consider it, and I think it's valid. But to me, it's a case of, do I really want to just blindly fade the daily ATR? Nah, probably not. However, if you really thought we're in a mean reversion environment, then could you use that as a level and say, hey, I now want to add and see a reversal signal like a bearish engulfing, like an exhaustion type move? Maybe. And maybe it becomes a kind of a width thing and you go, hey, there's the levels, I'm looking to fade those. I think they're arbitrary, they're tertiary type levels. They're not levels that they're not primary. No one knows about them. Unless they've got the chart on, obviously. They're not like your high or low or open or close. They're not secondary either because you haven't seen any proof of them holding. They're basically, I call them tertiary. So they're kind of levels that really align with the historical volatility of the market and maybe areas you consider fading. But for me, what I consider doing business at, probably not. It's more a case of, okay, it's that top price target, or if you've blown through the ATR, is there a new type of day in phase and everyone's scrambling for the door? That's a great question. Ruben says, thank you so much. I will reach out. Yeah, please do, Ruben. And that's a genuine offer there, pal, because I don't like to turn you away. And if I can help you, I definitely will. And Arta says, thanks so much for the webinar. Curious what you think about market and volume profiles. I heard Linda Rashke talk about it. I think they're great. I don't use them. Not for me. Doesn't mean I don't think they're valid. I see traders making great trades from them, doing very, very well. That makes sense to me. I only use something that makes sense to me as well. And so a volume profile specifically makes a lot of sense, where a lot of business is done running through levels. It's just not something that I've looked at it many, many years ago. I didn't find that much additional edge into it. I was doing okay. I stuck with my edge. I don't think it's something that it should be dismissed. If it's something you like, then dig into it. I think it's very, very valid. It's just not for me. Doesn't mean it's wrong. It's just not for me. Okay. Is that everybody? I think it is. Thank you very much, ladies and gents. We'll call it an evening there. Appreciate you all as always. Tomorrow, let's see what happens, eh? Let's see what happens. Keep your risk managed as usual. Take care, gents and ladies. Bye-bye.